Good morning and welcome to NYSE TV Live. I'm Trinity Chavez and today is Tuesday, October 8th. And today, International Flavors and Fragrances, better known as its abbreviation and ticker symbol IFF, will ring the opening bell to celebrate a pair of anniversaries. 135 years since it was founded and 60 years since it was listed on the New York Stock Exchange. And after the company opens up the U.S. equity markets, I'm going to speak with IFF CEO Erik Fyrwald about the significance of today's festivities and what lies ahead for the company. Now, this is just one of the several stories that we're following here on NYSE TV Live. Here's what else is on tap. The NYSE Tech Summit is taking place all day today, and in just a moment, I'm going to be speaking with the exchange's head of U.S. capital markets about the narratives that will dominate the event. Meanwhile, our parent company, ICE, just released its October Mortgage Monitor report, and you won't believe where the monthly mortgage payment stands now. Here's a little hint. It's at a record. Andy Weldon will also join us to discuss what's behind the price jump. And with the Hurricane Milton soon making landfall in Florida, we're going to take a closer look at the economic impact the storm could cause and how ICE is helping companies in the cone of uncertainty manage risks and recover from back-to-back storms. We'll also see what major averages can rebound from a sluggish start to the week. The Einstein of Wall Street, or Peter Tuchman, will tell us what he's monitoring more closely when it comes to today's session and when it officially kicks off. Last year's NYSE Tech Summit brought plenty of excitement to the global epicenter of financial markets, and this year's edition will be making plenty of waves as well. Chief information officers, chief technology officers, and other C-suite executives from NYSE-listed companies will also be on hand for the event, with notable startup CEOs and venture capitalists joining in all the fun as well. Now, the NYSE Tech Summit, centered around strategic gathering to collaborate on solving enterprise-level challenges, includes a full day of learning, networking, and collaboration among leaders driving tech innovation and shaping the future of business on a global scale. Now, to give us the inside scoop on what to expect from this year's big goals to the tech trends shaping 2024 and why it's a can't-miss opportunity for both startups and industry giants, I am joined now by Bonnie Hun. She is the U.S. Head of Capital Markets. Bonnie, it's so great to have you back on the show today. Thank you so much for joining us.
Thank you for having me.
So let's talk about this year's biggest headlines that are going to be discussed at this year's Tech Summit here at the NYSE.
Where do I start? I mean, it's amazing to kind of see how this Tech Summit has evolved since 2017 when we first did it. And the reason why we decided to put it together was really to bring together this next generation of technology leaders that are now part of our NYSE community, such as Snowflake, ServiceNow, SentinelOne. And so really to think about sort of what is top of mind. There's so many things. I would say that, by far the reason why we have such a great showing of companies coming here is because every company is a tech company. Mm-hmm. And as this is an amazing place, it all really happens here.
And talk to me about how events like this can shape the broader tech sector.
Sure. So as we know, tech is so ever evolving so fast, and being from the Bay Area and being in sort of one of the hyper aspect of tech, it's really great to make sure that we are able to share all that amongst that community. And when I say that community, I mean, as you mentioned in your beginning, it's not only just our listed companies, but these startups that are really trying to innovate and disrupt and change the ways that we work, mm-hmm. we live, we learn.
Can you give us a little bit of a preview and to our viewers as to what we can expect at this year's Tech Summit? Who are some of the keynote speakers? Who are some of the attendees? What are the discussions going to be focused around, and what will be discussed during the panels?
Sure. So that's a lot of questions there.
It was a loaded question.
But I think honestly, we were hoping to, and we have about 150 people coming, and it's really, as you mentioned, the C-level technology executives who really care about productivity, who really care about how do we make sure that we're building the next right stack to help operationalize and make our businesses better, mm-hmm. help our salespeople generate more revenue, anything like this, right? And so I think it is really sort of an amazing folks from Oracle, from ServiceNow, from Accenture, but also combining, as I mentioned, some of these amazing startups that are also changing things, such as corporate travel with Navan, such as how we think about the most important things around cyber with Sneak. And so again, those kind of conversations I think are really happening, not just at the summit today, but it really started actually last night when we had a trading floor reception for, and had people be able to mingle and collaborate and have those conversations.
And these conversations are so essential to how businesses do business. And it's happening here at the New York Stock Exchange, especially as we're seeing the rapid development of AI technologies being implemented into business models across various sectors, right? So it's so important that we are also at the forefront of these conversations. But talk to me more about what emerging trends you see coming up the pipeline for the rest of 2024, maybe even 2025, and if any excite you specifically.
Yeah, and you're spot on there, Trinity. I think, not only is that, we convene amazing people around tech and that every single company is tech, we're also a technology company, right? So again, when we think about how we've digitized the way that, equities are traded, the way that we're doing it in mortgage technology, all those things make us such a great place to have these types of conversations. But I go back to, just like it started, I think probably in 2023, it's AI, AI, AI. So it's no longer just about LLMs, but really sort of how does that really get implemented into large organizations, right? Like the financial services industries, like the healthcare industries. And so you think about and a lot of conversations around the use cases, around deployment, about the challenges. I think all those things, because AI is the biggest wave I've seen in a really long time. And people are so excited. And also having the VCs come in and really talk about what they're seeing in terms of these companies that are being formed and raising so much money to really kind of see see how we can leverage GPT or leverage Anthropic or any of those guys to really, again, propel their business forward.
And speaking of raising capital for investment purposes, let's talk to our viewers a little bit more about how the NYSE platform can help smaller stage startups connect with investors.
Absolutely. So we believe, again, that there's such a big ecosystem of not only the startup companies, but also the VC community, and also, I should not forget, the PE community, because they're making a lot of headway there as well into tech. And I think that it's very important to align these people together. And we've been able to, host many events here at the NYSE, whether it's dinners on the trading floor, whether it's receptions in the boardroom, to really bring together, as you mentioned, the venture capitalists with the CEOs, with the founders, so that, again, everyone's understanding and getting a sense of how quickly things are changing, what are those trends, and and how, again, once it becomes a little bit more mature, how large companies are going to implement them.
Yeah, exactly, and with over 2,400 listed companies here at the NYSE, and we host quite a number of events, more than 3,000 every single year, and it's events like the Tech Summit that are bringing capital and investors and also those startups together, and it's all happening here. Thank you so much, Bonnie, for joining us today.
Yeah, and one other thing to add, that's really a good thing that you brought up with 2,400 companies, because that 2,400 companies actually represent 80+% of public company IT spend. So again, it just really emphasizes why we are a really great place to host this and these kinds of conversations.
Thank you again, Bonnie, for joining us.
Thank you.
Now, one notable tech firm listed here at the NYSE, Oracle, rang the opening bell on Monday to celebrate its Financial Services Summit. Kristen Scholler spoke with the bell ringer, Sunny Singh. He's the Executive Vice President and General Manager of Oracle Financial Services, and he had a lot to say about how AI is helping his business. Let's take a look.
AI is very, very pervasive. It doesn't matter what part of the technology spectrum you're talking about. So if you really think about it, if you're trying to deliver a next generation customer experience to you and I as consumers, making sure that we have exactly the service that we need at the time that we need it, AI can definitely facilitate that. AI can also help banks comply with things like regulatory requirements. I'll give you a very quick example. Debt collection is one of the things that's heavily regulated, and we are able to use AI solutions, particularly generative AI, to actually monitor collection calls so that the tone and the sentiment of those calls are actually compliant with the laws. And we can provide feedback not only to the debt collector, but to supervisors. Now, this would be something that would take a lot of time, effort, and money, but with AI and the tools that we've built using generative AI, we are providing these capabilities out of the box to our customers.
And coming up, I'm going to speak with Andy Walden from ICE Mortgage Technology about the latest housing market trends right after this break.
Governor, how has Minas Gerais been working to attract investments, boost investor confidence, and encourage companies to start projects in the region, thereby creating jobs and increasing local incomes?
Bom, desde que eu assumi o governo do estado em janeiro de 2019, a bandeira de atrair investimentos tem sido prioritária, porque o estado de Minas, durante os anos anteriores, só estava perdendo participação na economia brasileira. E nós fizemos uma simplificação muito grande em todas as exigências que o estado fazia, aliás, ao setor privado. Hoje, o empreendedor que quer investir em Minas, o investidor sabe que o processo dele não vai ficar parado, engavetado em alguma das secretarias do estado. E nós temos mostrado que esses avanços são realmente reais, porque o tempo caiu e os números demonstram por si só. Minas Gerais, que no governo anterior ao meu atraiu 26 bilhões de reais, no meu governo, na minha gestão, já atraiu 409 bilhões de reais. Então nós estamos falando que é uma mudança de patamar não de 40%, 70%, é uma mudança de patamar de 800%. E a minha reeleição no final do ano de 2022, em primeiro turno, com 56% dos votos, com toda certeza é uma prova de que o povo mineiro hoje está mais satisfeito com essa gestão, apesar de ainda termos muito o que fazer pelo futuro.
What impact do green investments like clean energy?
Welcome back to NYSE TV Live. I'm Trinity Chavez, and each month our parent company ICE publishes its latest mortgage monitor, which examines the biggest issues related to the mortgage and finance sectors and housing industries. Well, this month the report took a closer look at the rising cost of insurance and property taxes as a share of monthly mortgage payments and how that verifies among markets. Now, according to the latest data from ICE Mortgage, the average 30-year mortgage rate currently sits at 6.36%. And to break it all down, I am joined now by Andy Walden. He is the Vice President of Enterprise Research Strategy at ICE for our Mortgage Monitor update. Andy, good morning.
Good morning, Trinity. Good to see you.
Good to see you again. Now, Andy, this number is considerably higher than the close to 6% mortgage rate stood at just a couple of weeks ago. So what do you think is driving this increase, and how is it much higher, and how much higher do you think it could climb?
Yeah, I think a couple things have really happened. One is the market had time to digest the latest Fed meeting and what that means for where the Fed is going and kind of anticipating bond and mortgage rate futures. We saw that happen in the early stages to mid stages of September. We also saw a very strong non-farm payroll number come out late this week, and the market reaction has been bonds moving sharply higher, mortgage rates moving sharply higher as well. They're now about 0.25% above where they bottomed out kind of in early to mid-September. In that 6 3/8 range is where we stand right now.
Now, Andy, as I mentioned earlier on in the show, that the average monthly mortgage payment hit a record of $2,070 in August, and that's about $140 more than this time last year. So that's roughly a 20% jump from pre-pandemic levels. So what do you think is behind those rising costs, and what could it mean for homeowners?
Yeah, I think there are a couple things that you see when you look at that numbers. One is among more recently taken out mortgages or folks that have bought over the last couple of years. Interest is the key dynamic there, and you can see it in the chart right here. The average interest payment that folks are paying today that have bought over the last couple of years in the post-Fed interest rate increase world, we've gone from $600 to $700 in interest payments a couple of years ago to $1,600 to $1,700 interest payments on more recently originated loans. And so that's really the key dynamic of folks that have taken out their mortgages recently. When you broaden that out to the overall mortgage universe, the 54 million folks that have mortgages in the US, property insurance jumps off the page. The average property insurance payment is up 52% over the last 4.5 years out there. In the market, it's roughly 3x the average increase that we've seen in principal, interest, and tax components of mortgage payments. And so property insurance, by far the largest increase in overall monthly mortgage expenses. We've gone from that accounting for 7.5% of the average mortgage payment just a few years ago to 9.5% of that average mortgage payment. And in risk-prone areas like New Orleans stands out. 1 out of every $4 that's spent on housing in those areas is going directly to property insurance.
Now let's break this down just a little bit further. Which component, when it comes to principal, interest, taxes, or insurance, do you see contributing most to these higher payments, and why?
Yeah, and it's really that property insurance component. And when you get into higher risk areas, I mentioned 52% increase overall over the last 4.5 years out there in the market. When you get into some of these more risk-prone areas, you're talking 70, 80, 90% increases in property insurance. When you look at the path of Hurricane Milton, the Hurricane Helene that just came through, those are those most risk-prone areas that are seeing the largest property insurance increases. And it's not just relegated to those hurricane areas either. If you look up the central portion of the country, up through Oklahoma City and Tulsa and Wichita, talking 1 out of $6 spent on housing is going directly to property insurance as well in those tornado and hail-prone areas of the country.
Now, with only 12% of the monthly payment in 2023-2024 mortgages going directly toward principal reduction, can you explain how the rest of the payments is distributed? And are there any strategies homeowners are using, like making an extra payment each year to reduce the interest portion of their payments?
Yeah, you're seeing them take a few different actions. You're seeing some additional $50, $100, $200 payments, or making one additional payment a year to help folks reduce those long-term costs of interest. We've also seen an increased frequency of large chunk payments being made on mortgages, $10,000, $20,000, $30,000 being paid down on some of these mortgages to reduce their interest expenses over time. You can kind of think of that as almost a long-term fixed investment that they're making in their mortgage instead of investing in the broader market. The other thing that obviously is a key focal point for those that have bought over the last couple of years is refinance and refinance incentive in the market. We were at a point just a couple short weeks ago where 40% of folks that have bought their home recently were in the money to refinance. And the average highly qualified borrower there could save at least $300 a month through refinance. So you're going to see that, especially if interest rates take another leg lower here, you're going to see folks looking for that refinance opportunity in the market to reduce those interest rate expenses.
Now, Andy, we have about 60 seconds left here, but I do want to switch gears to, obviously it's hurricane season. So increased property insurance costs are becoming more of a burden for homeowners, especially as we navigate hurricane season right now. So how much are you seeing insurance costs rise specifically in this market? And do you anticipate that these costs continue to increase as severe weather events become more and more prevalent?
Yeah, and again, I mean, it's up 52% total for the market, up 60 to 90% in some of these hurricane-prone areas. And when you look at the increased frequency, severity, the increased cost to rebuild in the wake of these storms, I think it's fair to expect those insurance costs to continue to rise. And that's why it's becoming an increased focal point for homeowners in those areas. It's becoming an increased focal point for regulators and folks that invest in the mortgage-backed security markets, as well as those climate risks and hazard risks change, and it changes the risk among those portfolios along with it.
A lot of important information right there. Thank you so much, Andy, for joining us today on the show.
All right, thanks, Randy.
Now, in putting together the Mortgage Monitor, Andy and the ICE research and analyst team aggregate, analyze, and report on the most recent available data from the company's vast mortgage and housing-related data assets. Here's a deeper look at how it's using data science to change the game.
Data science can help address some of the biggest challenges in the financial markets. If we focus on the mortgage market and follow the life of a loan from origination right through its pricing in the capital markets, our data science capabilities can provide a deep level of insight and analysis to a variety of stakeholders.
At ICE, we have extensive data sets, especially around 3 pillars: the property, the mortgage, and mortgage performance. This trifecta of data and its history is a bit of a data scientist's holy grail. Let's imagine a single property for a moment, 123 Main Street. And before mortgage is a twinkle in its originator's eye, we can apply data science to gather and curate detail about the property and its transaction history. Once a mortgage is originated, it will land in a portfolio, either as a whole loan or as part of a mortgage-backed security. Data science and analytics actually allows us to provide insights along the way to the performance of that mortgage, prepayment, default, forbearance, even natural payoff, updated values, tax estimates, and we can also measure what's going on in the market around the property or things that may impact the performance of that mortgage. As that loan on 123 Main Street is transacted, data science will be used to identify further risk and opportunity.
Quantifying loan-level climate risk requires knowing a suite of information about the property being mortgaged. We also need to model how severe a given hazard, like wildfire or flooding, will be both now and in the future at that specific location. Bringing all of this data together to quantify loan-level climate risk requires using data science tools to spatially join data sets of different resolutions, address data incompleteness, and build models to infer asset-level risk. The Sustainable Finance team has computed loan-level energy usage, energy bills, and carbon emissions, a statistic that helps us assess the affordability of a property over the duration of a loan.
The secondary markets are a way for originators to clear loans off their balance sheet. This means that they can take more risk and help more borrowers. That loan that we scored and got performance information about, it would likely end up hedged using a rate lock future on one of the ICE exchanges, and it's probably going to end up in a loan forward vehicle called a TBA. As this loan goes through its life, these models for projecting prepayment and defaults become key in figuring out how the loan will perform on the forward.
More investment flows into funding mortgages and housing, which puts more families in homes and tends to be the most important asset many people will ever own.
Now, IFF will be bringing the opening bell in just under 10 minutes, and we're going to have more on that in just a little bit, but right after this break.
I dropped out and moved to San Francisco when I was 17.
Okay.
And so I basically grew up in San Francisco, got to experience all of tech. And I was back home in Dallas one day, and my dad said, "What should I invest in?" And it made me really think about, why is there not one place that people can go through their brokerage app and actually have access to top companies like SpaceX and like OpenAI? Why is there not an ETF that does that? And so that was the genesis for Destiny.
And tell me about your mission to empower individuals through technology and AI.
So the idea behind Destiny is to be able to give everyday investors the ability to invest in top private companies before they go public.
Okay.
And so these are the companies that are impacting everyone's daily life. Epic Games, Superhuman, but they have no way of participating until they come and list here. And so that's why we created the Destiny Tech 100, meant to be a portfolio of the top 100 private tech companies.
Would you say that's the biggest challenge that Destiny is facing right now when it comes to bridging that gap between the public and private sector?
Yeah, one of the big challenges was actually regulatory. This doesn't really exist. You have ETFs and you have publicly traded companies, and you have private companies and VCs and private markets. And so trying to bridge both of these, we've spent the last 4 years actually working with the SEC, trying to get our first fund, the Destiny Tech 100, approved, and actually going through all of those hurdles. How do we create a regulated, registered, listed product that still holds all private companies?
So let's talk about Destiny's branding for a second. DXYZ. Why these initials for Destiny?
As we were looking at Destiny and we saw DXYZ, XYZ to us represents the future.
Yes.
It represents the future of the private markets and the future of the public markets. And so that's what we wanted to bridge.
Yes.
And so for us, DXYZ was very futuristic. It's also that visual representation.
Welcome back to NYSE TV Live. I'm Trinity Chavez. And while the NYSE hosts more than 3,000 events every single year, that doesn't mean that they're all contained to the walls of this iconic institution. Judy Shaw was recently at Houston Livestock Rodeo Show, where she spoke with Cisco Chief Administrative Officer Neil Russell about its biggest business achievements of 2023. Check it out.
So I'm the Chief Administrative Officer at Cisco. I've been with the company about 17 years now, and Cisco is the world's largest food service distributor. So we serve the food away from home market. So we serve restaurants, hotels, education, healthcare, anywhere, Judy, that you've had a meal that was not cooked from scratch in your kitchen, was likely a Cisco customer. So give us 4 walls, we'll give you a restaurant. We've got a wide variety of product, all the food, of course, the cleaning chemicals, the equipment, the supply. So we have all of those things within our SKU portfolio. We'll be about $80 billion in annualized sales this year. And we've been consistently raising our dividend for 50 plus years, showing the great financial strength that the company has.
Neil, as Chief Administrative Officer, what are your responsibilities?
You know, our definition of Chief Administrative Officer is a little different at Cisco. Oftentimes you're going to think about legal and HR when you hear that term. That's not me. The way to think about my role is the company's strategy, what we're working on, the initiatives we have in place, the things we're doing to drive value, and what do we say about it? So we have multiple constituencies, whether they're in the government, whether they're our investors, whether they're media, our employees. Our communications is part of my remit, and how do we think about and talk about all the great things we're working on, ensuring our customers understand who we are and the value we can provide to them, and all the other constituents and what they need to know about our great company.
And what would you say was your most impactful business highlight from 2023?
I'd say we're growing. You know, we participate in a large, fragmented, very interesting market. Food service away from home in the US only is about $360 billion market, and it's growing about 2 to 3% a year. So that pie is growing. And Cisco's slice within that pie is also growing. We're regularly gaining share in our space because we're the largest and the best at what we do. Now, we're able to grow because of 2 things, really. One, we have this fantastic core business. We have the largest and best sales force out there in the land. We've got more than 300 locations, and we deliver to every zip code in America. So that size and scale matters for us. And on top of that great core business, we have a series of growth initiatives we call our Recipe for Growth. It's transformational agenda that really increases the moat between us and our competition. A couple examples of programs we have within that program. One is called Cisco Your Way, where we've taken the industry and turned it on its head. This is a game changer where we now deliver it to a neighborhood instead of an individual customer. It's efficient for us, and our truck is there every day helping our customers with what do you need, what do you need, what do you need, and that's a very difficult thing to duplicate. Another would be our industry's first ever loyalty program that we call Cisco Perks. And it rewards our best customers with offers and deals and incentives to help them grow with us together in the future. Now, in addition to that, we also participate in M&A. So during the last year, we bought a great company called Edward Don. You'd probably recognize their logo if you saw it. They're the best equipment and supplies provider that exists in the space. They're about $1 billion size company, and they were a great addition to our portfolio.
Now, Neil, finally, tell me, what's your favorite food to eat at the rodeo?
Yeah. Well, Judy, we're here in Texas, so barbecue for me. And you got to be sure you get the smoked brisket. If you're going to be in Texas, the brisket is the thing to do and the way to go. It's a family favorite for ours, and we're sure to get it every time we're here. I love it.
All right, we are live now on the active trading floor here at the New York Stock Exchange. As you can see, the crowd is really filling up behind me, and you're going to see traders at points in time probably zip past me as we get ready to open up the U.S. equity markets. Right now, it looks like futures are pointing slightly higher, and you know we have so much more to get to today after we open up the U.S. equity markets, and we're going to be speaking with Pete Tuchman of Trade Moss about the upcoming CPI data, which could influence the Fed's next move, and then the kickoff, of course, of earnings season with major banks set to kick off all the action. We're also going to be speaking to ICE meteorologists about the economic impacts of Hurricane Milton, and see, that's what I mean about the traders active trading floor, about Hurricane Milton, but that's also one of the most powerful hurricanes in history recorded. And of course, we have IFF CEO who's going to be joining us later on in the show. His name is Erik Fyrwald. He's going to be talking about the significance of being here at the New York Stock Exchange for this significant milestone. And we're going to be giving you a play-by-play on the trading floor live here at the New York Stock Exchange in just a moment. And you know, we're about 30 seconds out right now. Again, I'm listening in on what the traders are talking about as they get ready to open up the global markets. And we're going to be capturing it all on NYSE TV Live. We have a lot of exciting interviews coming up, so make sure you stay tuned in. But we are going to turn it over to the opening bell as we get ready to see IFF open up the markets. Let's take a look. as we gear up for a big week in the markets. All eyes, of course, are on the upcoming CPI data, which could influence that Fed's decision in the next move and the kickoff of earnings season, with major banks set to kick off the action. So joining me to break this all down, the key storylines and what investors are focused on, is Pete Tuchman. He is from TradeMusk. Pete, gosh, we got a lot of action here on the floor today.
We do.
But we have a lot of green on the screen, it looks like.
Actually, we're up today. Yesterday was a sort of a short term. It felt like it was going to be more of a sell-off, but we're bouncing back really beautifully today.
And you know, I want to talk about the major storylines that are impacting markets. Obviously, geopolitical turmoil unfolding overseas, and we're also seeing the strikes impacting the U.S. economy, the global economy for that matter. You know, one day could cost the economy upwards of $1 billion. So talk to me more, dive deeper into this for me. How are these storylines really impacting the economy? How are investors reacting to the news?
Okay, so look, the investors get very aggressive and emotional about these things. Obviously, the strike was a big deal, but it didn't last that long. And even though it was short term, it's going to have some implications going forward. But I think where the market's now looking forward to the fourth quarter, obviously the seasonality of October and November are a big deal. Obviously, CPI number is a big deal, but obviously the labor number that we got, right, was significant. I think we're obviously looking at whether the Fed is going to give us 2 more 25 basis point cuts, 1 or an actual 50.
Are we seeing a reaction right now when it comes to the supply chain because of the disruptions of the strike? Even though it didn't last that long, it was postponed until January 15th, but what are your reactions from that?
It's really hard to get a sense of it. This market goes up and down like crazy every day, and we have so much data that comes in. I kind of look at it as a 1,000-piece puzzle. Every day there's so many different factors and components that really make this market move. Today's a bit of a bounce back after yesterday's aggressive sell-off. Yesterday's sell-off was a function of the fact that people were anticipating another 50 basis point cut, and we're probably only going to get a 25.
How do you?
That's the key thing. I think everyone's eyes are on the Fed and on interest rates. That's basically it. The other, sorry to interrupt you, but the strike is going to be a much longer term story.
Yes, yes. And I just want to point out to our viewers that the executive team is making their way down the secret stairwell behind the Bell podium as they are signing the wall. And again, we're going to be speaking to the CEO in just a few moments, but talk to me more about earnings season. Obviously, there's a lot of news right now that's moving markets. Is this going to have an impact when those numbers are released?
I think so, and all eyes are going to be obviously on tech sector and on the banking sector. What is the condition of the bank's balance sheet? What's the condition of the consumer? And how is tech going to be able to live up to last quarter's earnings, right? NVIDIA had blowout earnings last quarter. Obviously, tech is one of the sectors that takes this market up or down, so all eyes will be on that. And the banks are a big deal, right? What is the condition and the health of the bank's balance sheet? And that will be one of the first things to come out of the gate, and that's going to affect the market's movement.
And I do want to talk about CPI data because that's set to be released in 2 days. How are investors pricing that out right now? What do you anticipate, and how are you positioning yourself to be prepared for it?
You know what, I try not to really predict what's going to happen. We've been seeing a bit of a flip-flop on CPI, on PPI, on a lot of the labor numbers, right? Payroll, we were surprised once again. The day before yesterday, we had 258,000 more jobs than expected, so I try to never predict it. You come in the morning, you look at the numbers, and you just get and react. Price action is basically our lifeblood in this market.
Now, you know, Pete, I want to switch gears a little bit because you are doing a very important initiative, an event here at the New York Stock Exchange tomorrow night. Tell our viewers about that.
Okay, so me and a whole group, I'm just a part of a great team, Patty Casey and Mr. Lucchese. It's called the Member Handicapped Children's Fund. It's one of the oldest and longest standing charities here on the floor of the Stock Exchange. We have an silent art auction, we have a raffle, we have a huge party on the floor, and all the proceeds go to children's charities. So we're really proud of it. We've been doing it for many years. This year will be bigger than ever.
Because it happens here.
That's right, on the floor of the NYSE, the greatest financial institution in the world.
Amazing, people. I'll let you get back to work. I'll talk to you later. Thank you. Bye-bye. Now, stay tuned because we're going to have so much more to dive into, and especially when it comes to natural disasters like the recent hurricanes that are impacting businesses and what to watch out for the days ahead.
So you have the Bradesco team here. You're having an event at the NYSE. Tell me about this event you're holding here at the NYSE.
We're holding what we call an annual unlisted conference. So it's a two-day program. We bring Latin American companies to New York to meet with U.S. institutional investors. And we do it every year. It's our 12th edition, so we've been doing it for 12 years. And it's taking place yesterday and today.
Now tell me, how many companies are participating, and what is the reason for bringing these companies up here to the New York Stock Exchange?
So we typically bring between 20 and 25 companies. And the logic for having this event is that these companies have the opportunity to talk to investors about their business plan, their thesis, without having the pressure of having to do a deal. So these are companies that are, as the name suggests, of the event, unlisted. So they're not listed yet, they're privately held. And these companies are maybe 6 months to a year from an IPO.
What impression do these companies have being here and being a part of this event?
We have several companies that went through this event and then actually did their IPOs. So it helps. It's a successful event. And they like the opportunity to tell their story and get feedback from investors on the business plan, on their thesis. Like I said, without having the pressure to do a deal. And also from the investor perspective, when these companies do come to market, it's not the first time they're hearing the story. So they remember, oh, these are the guys that came here 6 months ago. Oh, I remember that story. So it helps. It helps with the IPO.
Now, as I mentioned earlier in the show, Hurricane Milton is expected to make landfall along Florida's western coast by midweek, potentially impacting densely populated areas like Tampa Bay with severe flooding, high winds, and storm surges. Authorities are preparing for large-scale evacuations with over 6 million residents potentially affected. Now, this comes as Florida is still recovering from Hurricane Helene, which struck just 2 weeks ago. Now, to talk more about the economic impact a natural disaster of this scale could have is Dave Margolin. He is the chief meteorologist for the Intercontinental Exchange. Dave, thank you so much for joining us.
Thank you, Trinity.
So let's just dive in here. Let's just briefly discuss, like, how are businesses supposed to prepare for a hurricane of this magnitude? You know, Hurricane Milton is anticipated to be one of the strongest hurricanes that we have seen in history.
Yeah, it is. Unfortunately, Milton reached a top speed of 185 miles an hour yesterday, which is near the highest we've seen in Atlantic Basin history. So absolutely, you have to prepare for potentially a catastrophic hurricane. Now, in terms of what you can do, obviously you want to try to evacuate as much as possible. If you can't evacuate and get away from the area, you know, you can obviously, you know, kind of shutter down and make sure you have all the emergency supplies that are necessary to, you know, kind of weather a storm like this.
Now let's talk about some key effects that are going to impact businesses there on the ground when it comes to shipping, logistics, tourism, food and beverage, hotels, everything. Like, how do you anticipate that the outcome will be after Hurricane Milton makes landfall?
Yeah, in terms of industry, so of course, you know, Florida is known for citrus. So this is one of the major sort of ag industries that potentially could see a significant impact. Now, this time of year, a lot of the fruit are still on the trees in terms of in central and southern Florida. Likely we'll see significant production impacts in terms of the fruit, but the longer term concern is actually the trees. And there could be significant impact to the trees too, which could cause multi-year reductions in production there. In terms of shipping and things like that, the port of Tampa is the biggest port in Florida. So certainly there's going to be some impacts in terms of moving product in and out of the state.
Now, given that Florida is still reeling and recovering from when Hurricane Helene made landfall just 2 weeks ago, and now we're anticipating Hurricane Milton to make landfall, how does this amplify, you know, how does this amplify the economic problems that are going to be addressed by these businesses after Hurricane Milton makes landfall?
Well, on one hand, maybe one silver lining of this is that Milton is expected to cross the peninsula of Florida and go out to sea. In other words, it's not expected to significantly impact the areas that were hurt last time, such as North Carolina, South Carolina, and Georgia. So those areas, the recovery operations, should be able to continue to proceed without interruption. However, of course, you're going to stretch resources, right? So now we're going to be in a situation here probably in a couple days where you're going to have two areas where there's going to be major recovery operations ongoing, and certainly that's going to stretch resources, which can cause delays.
Do you anticipate any long-term shifts in the market when it comes to insurance industries, especially among hurricane season? And do you think that the increased frequency of storms of this magnitude will have any effect on that?
Well, we're already seeing a change or shift in the insurance markets because of hurricanes and because of the climate risks associated. Florida, places like Florida and Texas have some of the highest rates in the country. I think in some cases 3 times what the national rate is. And although I'm not an expert in this area, I would imagine the fact that we're going to see now 2 major hurricanes causing significant damage across the southeast United States, that after this, we're probably going to see only that trend increase. And in terms of, your second question was in terms of the climate issue, certainly this is something that I think industry is already embracing more of, but there needs to be a lot more work in terms of better assessing how climate is going to impact the frequency of these storms, especially intensity, and also the buildup of business and population along the Gulf Coast.
Thank you so much, Dave. A lot of important takeaways there.
Thank you, Trinity.
Now we're going to dive deeper into how ICE data is helping businesses during hurricane season, so stick around.
Yeah, after 27, we started a company, but there were 2 guys, 2 mobile phones, and 4 river ships, and that was it. And since then, we have developed this into a more or less real company. And of course, it's a stamp of approval to be listed here on the New York Stock Exchange. So it's a big day, but it means we have to get back to work tomorrow.
So, Tor, why was now the right time to go public?
Well, Viking has developed, it's always been my intention that this company could be a public company. I think now it was a good time because we have had some private equity partners, and in the nature of their business, they from time to time had to create liquidity out of their holdings. So I thought this could be a good time for them to have that opportunity. And that's really why we're doing it, and they are selling the shares we're selling now. I hold on to my shares. I don't see any reason to sell at this time, or for that matter, ever.
And Tor, what sets Viking apart? What makes Viking different from other public cruise and travel companies?
There's so much that sets us apart, but I say that if I should say it in 3 simple characteristics. First of all, we are about the destination. We are not about the large ships which have water slides and all that kind of stuff. That's great if you have teenage or younger children. But we say it's all about the destination. So we like to take our guests to interesting places.
Joining me now is IFF CEO Erik Fyrwald, who rang the opening bell, kicking off trading for the day. Erik, you are here celebrating 2 huge milestones, 130 years and 60 years being an NYSE listed company. Talk to me about the significance in this moment and how you're feeling coming off that bell podium.
Feeling great. It's such a historic day for IFF, and I'm so proud of our team today and the team before us that has made this possible. It's just a fantastic milestone and many more to come.
And talk to me a little bit more about the products that IFF really focuses on building and incorporating the sustainability initiatives that you are also so focused on.
Yeah, we have a great impact on bringing joy and health to consumers in a sustainable way with our flavors, our fragrances, our food ingredients, healthy food ingredients, and our bioscience products. Bioscience products that do things like make laundry detergent more effective at room temperature with less water, so huge positive impact on the environment.
From your vantage point, what would you say is the product that's in most demand by your customers? I know you don't want to play favorites, but...
Well, they're all in demand now because the consumer products companies want to appeal to consumers more, so they want more innovation. And we bring great innovation in flavors to make food taste better, healthy ingredients to meet consumers' need for health and clean labels, and fragrances that make people happy or energized or really have an impact on their life. And then, of course, our biosciences business that has a huge impact on reducing carbon.
A lot of important initiatives right there. So talk to me also about your strategic goals for the rest of 2024.
Our strategic goals for the rest of 2024 and into 2025 are to make sure everybody in the company is really focused on serving our customers better with leading innovation and doing it in a way that brings consumers joy and health and makes the environment much more sustainable.
Do you have any other products that might be coming out in the near term that you would like to talk about?
Well, we have great naturals, flavors, and fragrances that are really exciting people. So, for example, Charlotte Tilbury recently came out with a line of fragrances she worked with IFF to make. They were done with AI technology, and it's a series of products one that brings you joy, one that gets you energized, one that makes you relax, one that makes you more romantic. So this kind of thing that evokes emotions and makes people mentally more healthy and joyful is exactly the kind of thing we like to do.
You know, that's incredible. And I just love how the implementation of AI technology is being implemented across various sectors, including IFF's business.
Great, both on the consumer side, the research side, and the production and supply side. Things are so complicated these days. AI helps make it simpler to understand what are the best ways to do things.
That's great. Well, thank you so much, Erik, for joining me, and congratulations again.
Thank you. Great to be here.
Now we have so much more to get to. We're going to take a short break, and we'll be right back. Exonius works to help customers control complexity by solving the most difficult, foundational, and widespread problems they face today. And we have the co-founder and CEO joining us to talk more about it on this episode of Taking Stock. Exactly how do you help your customers stay ahead of emerging threats and technologies?
What we say is that organizations today have a lot of different technologies they use, whether it's security platforms or IT platforms, using the cloud, using identity systems. And what we've noticed is that the organization today looks like a puzzle, right? If you're trying to understand what the full picture of the puzzle is, you can't do that by looking at it one piece at a time. So the technology we created was to say, let's take all those different pieces. We've gone to 1,000 different integrations that we have of any kind of product, any kind of system an organization might have. And by using those integrations, very quickly, we get all those different pieces of the puzzle together, and we know how to put them in the right order. And for the first time, show organizations everything they have, whether it's applications or devices or identities or vulnerabilities or anything that's part of their digital infrastructure.
And staying true to your vision has been extremely beneficial, right? I know you have some news.
Last year in 2023, we passed 100 million ARR, which is a huge milestone for any startup. But we've also done that extremely fast. We've done it in 4.5 years from 1 million. That's one of the fastest we've ever seen in cybersecurity. And I think the reason for that growth is because of the pain and the value that we bring to customers. And we're looking forward to growing from 100 to 1 billion and beyond.
A lot to look out for. Well, thank you so much for joining me.
Well, thank you for having me.
Joining me now is Phoebe the Breeze. She is the Senior Manager of Research and Content for our parent company, the Intercontinental Exchange. Good morning, Phoebe.
Good morning.
Now, I understand that your group at ICE Climate has done some analysis on the impacts of Hurricane Helene on the municipal bond market. What motivated this analysis, and can you talk us through some of what your team did?
Of course. Yeah, to state the obvious, first and foremost, Hurricane Helene has had a devastating impact on local communities in Western North Carolina, Eastern Tennessee, and parts of Georgia and Virginia. I think it's impossible to see the images and the news coverage coming out of that area without having your heart go out to these communities. In ICE climate, we think a lot about infrastructure in particular, and the impacts of infrastructure on people's everyday lives, both in terms of infrastructure investment and infrastructure damage. And the municipal bond market is really one of the primary financing engines for US infrastructure, especially at the local level. I think that's really one of the main reasons we were interested in looking into this in particular. Over the past, oh yeah, sorry, go ahead.
No, go ahead. Sorry, I didn't mean to
Oh,
cut
yeah.
you off, Phoebe.
No worries. Yeah, I was just going to say, over the past 5 years or so, the ICE Climate Group, or the group that's now ICE Climate, has built up this really comprehensive library of the geospatial boundaries of municipal bond obligors and linked those boundaries to individual securities. So what we did in this analysis was we looked at National Weather Service flood alert boundaries during the period of time that Hurricane Helene was impacting the southeastern US. And we found the municipal bond obligors that were exposed to those flood alerts.
Now, you talked a little bit about some of your findings, but throughout your research and your team's work, did anything strike you as odd, or what was the most surprising takeaway for you?
Yeah, so overall, Colin Sullivan in our group made these really striking maps showing this municipal bond exposure during Hurricane Helene. And in total, we found that there were over 300 municipal bond obligors that were exposed to these National Weather Service alerts. And these obligor locations are linked to about 15,000 individual securities. And you can see this in this map that Colin made really clearly. On the left, that was the view of the entire southeastern US, and the blue were the National Weather Service flood alert boundaries, with the green showing the municipal bond obligor locations that were exposed to those alerts. And he zoomed in on the Asheville area as well. So going forward, these municipal bond obligors, the sort of striking thing about them was that they included everything from, school districts, counties, towns, charter schools, universities, among many others. And going forward, ICE Climate has developed what we're preliminarily calling Hazard Watch, which is a tool to enable clients to do this kind of exposure analysis to hazards in near real time.
And what are your thoughts on the longer term implications of these kind of impacts, Phoebe?
I think one of the many shocking things about Hurricane Helene was just the immense amount of rainfall that fell over Western North Carolina in particular. Some of these communities experienced well over 13 inches of rain in a less than 3-day period. And that caused these rivers, in some cases, to crest over 25 feet. And I think this storm, in many ways, illustrates the importance of awareness of inland flood risk and rain-driven flood risk. And hopefully along with that awareness comes, preparation resources and maybe in some cases flood mitigation infrastructure as well. And the municipal bond market likely has a large role to play in that kind of effort.
Thank you so much, Phoebe, for that important information. It was great having you on the show.
Of course. Thank you.
Now, switching gears a little bit, as the NYSE Tech Summit is officially underway, our head of social media here at the New York Stock Exchange, Laura Diorio, stopped by Grand Central Station as NYSE-listed company Joby showcased their latest innovation, the electric air taxi. Let's check it out.
It's been 3 years since Joby listed on the New York Stock Exchange, and they have just launched an incredible all-electric air taxi that they have parked right in Grand Central Station. So we hopped up from Wall Street to check it out. This thing is amazing.
So the aircraft, as you can see, it's got 6 propellers and it takes off like a helicopter vertically, but these then pivot, so then it becomes an airplane, which allows it to fly faster. This is a piloted aircraft, so a pilot and 4 passengers. You can pull up an Uber and select that you want to go to JFK to catch your Delta flight, and the Uber picks you up, brings you to the heliport, you take off and you land at JFK in front of the Delta terminal and onto your flight in like 7 minutes. Why don't you sit in the pilot seat?
I'll be the pilot. Sorry, I gotta hop on comms really quick.
There you go.
I gotta check in with my air traffic control.
Very good. There you go.
Perfect.
Yeah, so this, excellent.
Thank you.
Excellent, yes.
So we're going to take off. I'm actually flying this out of Grand Central.
Let's come back here and get a ride as a passenger so you can see what the view is. It's absolutely incredible.
This is where I belong.
Nice seats.
Wow.
See how spacious?
This is much more my speed, is just enjoying the ride in the back. Oh my gosh, it's the New York Stock Exchange. Oh look, the Empire State Building. I can see the Chrysler Building. Wow.
It is important for us to be very sustainable. Not just sustainable because this is zero emission, but sustainable from noise pollution. Unlike helicopters or airplanes, you cannot hear it when it flies overhead.
And you just had a recent announcement. Tell me a bit about that.
Yes, we did. So we have an incredible partner, Toyota, and they just invested $500 million to accelerate our path toward certification and to scale manufacturing.
Uber, Delta, Toyota, the list keeps
World
going.
class. We have a full global footprint.
Imagine skipping traffic and taking to the skies instead. You guys have to come down to Grand Central Station in Vanderbilt Hall to check out this amazing all-electric air taxi.
Now Laura is joining me now to talk more about this incredible story working with the Joby team. I loved your package. It was so cool. Talk to me about the work that went behind it and working so closely with the Joby team.
Yeah, thank you so much. It was a great time with Joby. So we support our listed companies for the legacy of their listing, right? So Joby listed about 3 years ago on the New York Stock Exchange, and they knew that they were coming back to Tech Summit to showcase the latest incredible innovation with this all-electric air taxi. So they reached out to us. They know that we have incredible capabilities in our content production, as you're watching live right now. And so we collaborated. They wanted a really fun and exciting video that showcased that the future of air travel and air mobility is right now. Folks will be able to order this incredible aircraft in the Uber app, also NYSE listed, and they have an amazing partnership with Delta for all that air traffic control. And so it's a great collaboration amongst NYSE listed companies, and we were thrilled to celebrate them.
Amazing. And speaking of collaboration, walk us through some of the other projects that you and your team have going on and how we support our NYSE listed community of over 2,400 listed companies when it comes from a social standpoint.
Yeah, absolutely. So we have a reach across platform of over 3 million followers. So it puts us in this incredible position to highlight these companies in various unique ways. For example, just on the trading floor, we have this amazing 3M post-it wall for young leaders to go up and write their dreams down and feel like they are a part of making their mark on the trading floor. And then, of course, every time a listed company comes through, from IFF to later this evening with Guardian Pharmacy, we use the opening bell and the closing bell to give those companies this platform to celebrate with us. And so to have it on the Tech Summit means that all of these other amazing companies will be able to see the work we got going on.
Amazing. A lot of takeaways there. Thank you, Laura, for joining us today.
Thank you.
Well, that'll just about do it for us here. I'm Trinity Chavez for NYSE TV Live. We'll see you tomorrow morning.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital market here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a